as we got closer to the stock market opening, people got very excited. The ETFs were going to begin to trade. And it seems like that. Once they started trading, you saw this pop on Bitcoin, and then it topped out and reversed. Bitcoin did put in a daily topping tail. Okay, now daily topping tails, they don't give you absolutes, right? It doesn't guarantee that Bitcoin's going to go down. It changes the odds. It tells us, okay, we now have this candle, which is a topping tail. We now can say that there's a higher probability than not, maybe 60-40, that Bitcoin is short-term put in a high, and it may trade back down.
Gareth Soloway, a well-known markets analyst, has offered insights into the recent price action of Bitcoin and its potential future trajectory. Bitcoin fell to $45,800 Friday morning, after spiking to $49,000 early Thursday after a volatile Thursday marked the first day of trading for spot Bitcoin ETFs. Thursday was a historic day for the crypto industry after the SEC approved 11 Bitcoin ETF proposals late Wednesday. Bitcoin price made a comeback above $42,500 on Monday. Rising Bitcoin supply on exchanges saw the Bitcoin fear and greed index shift to neutral. The world's largest cryptocurrency rebounded about 157% in 2023. Bitcoin is up 8.5% so far this year. Meanwhile, other trends are set to drive Bitcoin in 2024, including the upcoming halving event in April and the influx of institutional participation. After the reversal, Soloway notes that Bitcoin exhibited a daily topping tail. He emphasizes that, in his view, this pattern doesn't assure a downward trajectory, but does alter the probabilities. According to crypto research firm Swissblock, the recent dynamics in Bitcoin have not lived up to the expectations set by many Bitcoin maximalists, with the asset failing to break the $50,000 mark and the hype surrounding ETFs showing signs of cooling down. Research firm CryptoQuant predicted last month that Bitcoin would fall to as low as $32,000 after an ETF approval. Soloway pinpointed a critical support level of around 43,428 from a technical analysis perspective. Soloway maintains a confident stance, asserting that there is no need for apprehension as long as Bitcoin remains above this level and the extended-term trend line. Now let's focus on the video to explore more. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
Initially on the approval the day before, there was very little movement. But as we got closer to the stock market opening, people got very excited. The ETFs were going to begin to trade. And it seems like that. Once they started trading, you saw this pop on Bitcoin, and then it topped out and reversed. Couple things to note here. Number one, we did hit this longer-term trend line on Bitcoin. Right? So again, if we look at this, we can see very clearly this 2019 high through the lows of the bull market, and that's the high pivot now on the market. It was also a classic perfect 618 Fibonacci retrace. So again, multiple levels. And by the way, you can go back a month ago. I was talking about, listen, Bitcoin probably traced to 48 to 50,000 before a pullback. Yesterday, based on that reversal, and this is important for us as technicians, right? Let me remove these lines. Yesterday, Bitcoin did put in a daily topping tail. Okay, now daily topping tails, they don't give you absolutes, right? It doesn't guarantee that Bitcoin's going to go down. It changes the odds. It tells us, okay, we now have this candle, which is a topping tail. We now can say that there's a higher probability than not, maybe 60-40, that Bitcoin is short-term put in a high, and it may trade back down. Where would Bitcoin have first technical support? I'm going to show you guys right now on the chart. Let me just zoom in a little bit. We're going to take this line and drag it right up here, and this is kind of my zone right now. So again, look for Bitcoin. Bitcoin can trade down to about, let's see, what price is this here? 43,000, 42.8, right in that vicinity. And as long as it holds this longer-term trend line, I think it's fine, no big deal. But if it breaks that 42.8 and trades below, you're probably going to 38,000. And then if that breaks, then we have to start talking about potentially 30,000. That might sound ludicrous, but again, I'm a technician. Unless 38 breaks, 30,000 really is irrelevant. If that breaks, then we start looking at the charts and gathering the data.
According to Soloway, unveiling the producer price index data has resulted in the markets maintaining neutral to higher trading levels for the day. The Consumer Price Index report for December surpassed expectations, revealing a 0.3% uptick in consumer prices, contributing to an annual rate of 3.4%. Despite this higher-than-expected inflation, bond traders appeared unfazed and factored in the likelihood of more Federal Reserve interest rate cuts throughout the year, starting in May. Consequently, traders continue to express a bearish view on the U.S. dollar, despite the Fed's attempt to push back against multiple rate cut expectations this year. The U.S. dollar index continues to trade in a very tight range and above its December low. Let us focus on a video.
Well, if we take a look at what's going on today, let's do that right now. Let's jump right in. This is the 10-year yield. Let's go right to that. The 10-year yield on the back of this news. Again, remember yesterday. In fact, let me show yesterday here. Let's zoom out. Okay. So look at this. And by the way, this shows you that, again, it's questionable what really was taken into impact yesterday. But on that CPI data that was hotter than expected, higher inflation than expected, look, we saw the move up in rates. We went as high as about 4.07% on the 10-year. All right, then the markets were like, nah, we don't buy it. We're jovial. We think everything's fine. The Fed's going to cut rates. And the markets kind of came back down on the yields, and we kind of settled in. We were upticking again going into the CPI data, or the PPI data, excuse me. But then look at that, right back down because, again, no inflation on the producer prices. And again, what does the market do? What do we know about the market? When yields come down, markets begin to move higher. So initially pre-market, we were actually down pretty sharply on the S&P, the NASDAQ. The NASDAQ futures, in fact, were down about 100 points, which is a decent drop. But again, as soon as this news came out, the NASDAQ began to rebound, the S&P was rebounding, and everything seems hunky-dory going into the weekend. All right, so let's go on to the next chart here. The dollar again, you could see the same thing. The news came out. Again, it's dovish. It means the Fed. If we are seeing, and again, this is a big extrapolation. If the PPI data does get translated over to the consumers and we actually see inflation at 0 or even negative, what does that mean for the dollar? It means the Fed can print potentially money again, which means a weaker dollar, and the dollar reacted to the downside. Looking at the SPY, this is the S&P 500, the spiders pre-market. This is where we closed yesterday right here. You can see yesterday after hours, we were down ticking. This morning, we kind of jumped up a little bit. Then we fell down. Then we actually had a pretty big dip as initially when JP Morgan earnings came out, the stock dumped, although it is, last I checked, higher on the day. We also saw other earnings come out from banks. They were, again, mediocre at best, and the initial market reaction was down. However, JP Morgan turned around. We were chopping up here. Then right here is where that PPI data came out. And the markets, again, are basically trading now neutral to higher on the day.
The crypto market sentiment, as reflected by the Crypto Fear and Greed Index, has shifted to neutral for the first time since October 2023, following almost 3 consecutive months in the greed phase. The index, a key indicator of crypto market sentiment, transitioned just days after the U.S. Securities and Exchange Commission approved 11 spot Bitcoin exchange-traded funds. This concludes our discussion for today. Feel free to share your thoughts in the comments section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.